The UK stock market has over 1,500 companies. We're only looking to invest in probably about 5 to 6 companies out of the FTSE 100. It will depend from time to time and market conditions. In the mid-tier, the 250 companies in the mid-250 market, we'd probably be picking 10 to 12 names. And then from the rest of the market, over 1,000 businesses, we'd be buying 15 to 20 investments, probably putting a smaller amount of the fund in those more interesting, higher risk names. Concentrated funds have been proven to outperform, and intuitively that's fairly obvious. If you're buying 20 or 30 investments, then it's possible maybe to find those where you can add value and where they're good ideas. If you get down to 100, 150 names, then actually sometimes those destroy the portfolio returns because they're less good, less high conviction. We're always looking for conviction that something is mispriced. First, we look to identify why perhaps something is mispriced, and to understand that, we'll probably try and find the 3 or 4 factors that we think driving an investment decision around a particular investment. And if we can't get conclusion with that, we might go back and look at it. But if we're not comfortable with it, if we don't have conviction, we won't invest. We often get conviction using experience. That's my experience from over 5,000 company meetings over the year, seeing how businesses develop through time, seeing how certain industries play out according to the economic cycle. So I would get conviction from that. I get a lot of conviction from management investing their own money into shares. You know, there are shares every week where management are putting hundreds of thousands, millions of pounds into a situation, which is really helpful sometimes if it's a value company where perhaps the last year or two hasn't played out perfectly for it, but where we think there might be a lot of hidden value. If the directors themselves are putting the money in, that can often lead us to get really good conviction.